Good afternoon, everyone. Brian, thank you for the introduction. It's a pleasure for me to be here and talk about the topic. I think the first task of the banking system in supporting economic recovery is to ensure that the system is not a threat to economic recovery. The banking system, including Bank of Ireland, got significant support for an investment from the Irish taxpayers. In Bank of Ireland's case, at September 30, 2008, when the system-wide ELG guarantee scheme was put in place, our covered liabilities were 136 billion. In early 2009, we received a capital investment of 3.8 billion from the taxpayers, and in 2011, the taxpayers invested another billion in the bank in a contingent capital instrument. Obviously, a lot of the other banks got significant higher levels of support and investment. So when we had received this investment, as the crisis began to unfold, we had a really genuine conviction that Ireland would survive and that Bank of Ireland would survive. However, we had to make this happen, and we had to produce a comprehensive plan to address the bank's problems, bringing the bank to viability and to sustainable profitability. We recognized the critical role that the Irish economy had for our recovery and that Bank of Ireland's recovery had for the Irish economy. We could not recover unless we ceased to be a burden on the state. We therefore recognized a strategic and, dare I say, a moral imperative that for Bank of Ireland to achieve our ambitions as a commercial organization, we had to reduce the risk the taxpayers had from Bank of Ireland, reward any investment from taxpayers, and repay that investment. Those 3 R's became our mantra in our engagement with the taxpayers. We knew we had to shrink a bank which had got too big. We had to reach a size which we could fund safely. We had to refocus how we funded the bank. We had to reduce our costs to reflect a different size bank and a changed world. And we had to raise capital. The capital was needed to pay for this restructuring, to absorb loan losses, to restore market confidence in the bank, and most importantly, to ensure that the bank's ambitions for its future as it emerged from restructuring could be met. To raise this capital from the private sector, we had to ensure that Bank of Ireland had an investable proposition. To have an investable proposition, we had to ensure we nurtured those of our businesses and franchises where we believed we had sustainable strategic advantages and that we invested in those businesses to ensure that we did not fall into the trap of merely trying to cut your way to glory. Our plan required the support and endorsement of the Irish government, the EU Commission, and the funding and capital from the private sector markets. We have implemented our plan over the past 5 years. We've reduced our total balance sheet size by over a third, or more than 50 billion, through the disposal of businesses and assets. Aside from asset transfers to NAMA, the shrinkage has been outside of Ireland. It has been of businesses and assets which, while of good quality, we could no longer support from a capital or liquidity point of view. Our deleveraging is done. While investing in our retained businesses, we had to reduce our costs, and we've done so by over 500 million, with staff costs having made a significant contribution to that. Regrettably, over 6,000 people have left the group's employment, and we've obviously had to have significant changes to remuneration structures that we have. A particular focus has been on pension benefits, where large pension deficits had to be dealt with to protect the pension schemes themselves and to eliminate the negative impact such deficits had on the group's capital costs. Cost programs are ongoing, but investments are being made. Our balance sheet is now wholly funded by customer deposits in stable retail and business customer franchises in Ireland and the UK, or through market funding of greater than 1 year. In 2013, we were able to fund ourselves right across our capital structure through a range of issuance with strong, diversified, oversubscribed demand from overseas markets. Funding is not an issue. Reflecting the major focus we have had on this issue of improving our asset quality and the general improvement in economic and liquidity conditions in our main markets, our asset quality, while still with challenges, has shown material improvement, particularly over the last 18 months. Asset quality is not a drag on customer acquisition. Capital is the enabler in any business. We have raised over 10 billion of capital from the private sector, and private sector investors own 86% of the Bank of Ireland. This capital has supported our restructuring, strengthened our balance sheet, supports our growth ambitions for our core franchises, and has met our 3R obligations to the taxpayer. The exceptional liabilities guarantee from the taxpayer has expired, eliminating over 130 billion of Bank of Ireland contingent risk for the taxpayer. The reduced scale of our group, our changed business model, and revised liquidity and funding strategies should ensure that this liquidity risk does not recur. The taxpayer's investment in Bank of Ireland peaked at 4.8 billion. We have returned 5.9 billion in cash to the taxpayers, who still hold 14% of the bank with a market value of circa 1.3 billion. The taxpayers have got their cash investment in Bank of Ireland back. The taxpayers are making a cash profit, and the taxpayers have a further potential upside. This is absolutely right and appropriate. So while there are always risks, I feel that today, the very dark cloud which the banking system posed for the solvency of the Irish economy and its negative impact on internal and external confidence in the economy is lifting. However, that is not enough. That should satisfy no one. The banking system must move from being a threat to the economy to being a support for the economy, or else we in the banking system have no raison d'etre. We in Bank of Ireland most firmly believe in that. The progress we have made over the past couple of years is but a staging post. The taxpayer support was on the basis that that support would be repaid and that we would play a productive role in this economy. The over 10 billion private sector capital we raised did not come from people who felt sorry for us. It came from people who expected to see their capital being deployed to productive use in our businesses, meeting the needs of customers on a commercially sensible basis and generating a return. If we do not do this, all the work over the past few years will have been for naught, and we will have failed as a management team. We've had a lot of support, and we've worked very hard over the past 5 years to hold on to, nurture, and invest in the businesses and franchises we have today. We must move them to the growth phase. We believe that the recovery in Ireland is well underway. GNP and GDP are growing again. The numbers in employment have been on a steady upward trajectory. Every week, there are more people with money in their pockets from being in work. The number of people who are unemployed, while still far too high, and Anne touched on the human factor in that, it is nevertheless reducing. The relative competitiveness of the Irish workforce continues to improve significantly against our European partners. House and property prices have stabilized and are showing signs of sustainable recovery. Consumer confidence continues to improve. Ireland continues to have a very large and growing balance of payment surplus. As a country, we are selling more than we are buying. International companies, investors, and markets have recognized and are rewarding the progress Ireland has made. We are seeing near record levels of inward investment into this economy. There is significant liquidity from overseas looking to buy Irish assets. Irish government bond yields from record levels of 14.5, 14.6% in July 2011, before we recapitalized, have come in towards core European country levels and well under the rest of peripheral Europe. In January, Ireland was back issuing into the public markets with diversified, oversubscribed demand. The future is looking better. However, there are still considerable issues from the last decade. A particular issue for the banking sector is the quantities of legacy debt that a segment of our customers hold. The banking sector has a responsibility and a commercial necessity to help customers deal with this issue, whilst bearing in mind our responsibilities to our various stakeholders. Our stakeholders include the vast majority of our customers who are meeting their obligations, often with challenges and sacrifice to do so, the taxpayers who expect their investments to be rewarded and repaid, depositors who expect their money to be safe, and private sector investors who have provided their capital to support the growth and development of our businesses. In some cases, the issues that our customers face will be too deep to be able to be restructured. These have to be faced up to. However, our own experience in Bank of Ireland is that the vast majority of our customers with debt repayment challenges can be supported in a way which works for the customer and is commercially sensible for the bank. Such restructures must be sustainable, or else we are wasting our time and our customers' time. The customers and the public will judge the banking system on the progress it is making in debt restructuring, which takes into consideration all of the stakeholders' interests. As we in the Bank of Ireland are in the public markets every day, the reduction in our non-performing loans and sustainability of the restructuring arrangements we've put in is something which the market is paying a huge focus to. This is a difficult process. It is time-consuming. Real progress is needed and must be demonstrated. For Bank of Ireland, it is a commercial imperative that we do so, and we are doing so. This issue is challenging, and of course there are other challenges for all in the economy. However, we strongly believe that this is a time of opportunity for focused business people who have worked over the past few years to enhance their customer relationships and their franchises. We in Bank of Ireland see the opportunity, and we have raised considerable capital from the private sector on the international markets from people who also see the opportunities that Ireland offers. We have a firm belief that economic recovery is underway. To support that, we've ensured that we have a universal banking offering in Ireland, focused on winning and developing lifelong relationships with customers across a wide product range, from consumer banking, mortgage offerings, life, pensions and investments, business banking, corporate banking and treasury services. In Ireland, we are number one or number two in everything we do. Our 5-year plan, which we shaped in early 2013, required us to lend over 30 billion to Irish consumers and businesses. We've been investing in Ireland. We've been investing very heavily in payments infrastructures and in online and mobile propositions. And further significant investment is needed and planned. At the same time, we also believe strongly in having a viable branch network. Sometimes the easy option is to see branches as a costly overhead to be eliminated. We see it as important that we have an on-the-ground presence in places of commerce throughout Ireland. Certain of our very important products and services in areas such as business loans, mortgages and investment products require a face-to-face proposition in order to generate customer satisfaction and revenues. In SME banking, our branch network, supported by sector specialists, have a critical role in providing support to customers and developing new relationships through their face-to-face, on-the-ground marketing and relationship development activities with our potential and our existing customers. This activity is complemented by our sector specialist teams, national enterprise weeks, business conferences, credit and export clinics, and an array of other activities to circulate advice and information to customers, and also to stimulate demand and confidence in the economy. My colleagues within our business banking teams have had to go through a considerable re-education and training in the past couple of years, in particular on the characteristics of specific sectors and in cash flow lending skills. We've complemented this activity through our investment in a range of specific funds and the provision of over 200 billion in capital to specialist venture capital providers. In 2013, we approved new and increased lending for SMEs of 4 billion and accounted for over 50% of new lending into the market. The further development of our business banking franchise in Ireland is a crucial component of our group strategy. We have made some progress, but we have a lot more to do to achieve our ambitions. Our corporate banking business in Ireland services our largest indigenous Irish customers and multinationals operating in Ireland. My colleagues in corporate banking had a very successful year in 2013. On the multinational side, the near record levels of foreign direct investment gave us opportunities with existing companies newly establishing in Ireland to provide them with an efficient, comprehensive banking service that they expect to receive for their demanding requirements. As Irish companies expand their activities in Ireland and abroad, and reflecting their relatively benign interest rate environment, a number of Irish corporates have been seeking to term out their borrowings and put in place longer-term banking syndicates. The presence in the syndicate of an indigenous Irish bank anchor as either the arranger or a significant participant is very important for these companies, and we in Bank of Ireland have been pleased to be part of that anchor. We've also seen some competitors exit the market, and this, together with companies refinancing out of IRBC portfolios, has been an area where Bank of Ireland's corporate team have been able to provide significant support to corporate Ireland to mutual commercial benefit. As we look to support the Irish government's desire to continue to invest in the infrastructure of the country within a constrained financial envelope, Bank of Ireland has been able to deploy our international project finance expertise in the local market. We've been pleased to be able to help structure and fund to the extent of 150 million investments in 18 new schools under the public-private partnership model, with Bank of Ireland also playing a pivotal structuring and funding role under the PP model for major road projects such as the N11, the N7 and the N18 schemes. We see this as a win-win for us and the government. Investment in infrastructure, meeting specific needs, but also as a particular part of a stimulus package, which we know the economy needs. Indeed, as we look to the construction sector itself, we see some pickup in activity and have allocated 250 million to support construction and development activities. We've also allocated a 75 million fund to support our homeowners wanting to renovate their homes and avail of new home renovation tax incentive scheme introduced in the last budget. Recognizing the difficulties posed for many business customers by the recent flooding, we've allocated a fund of 20 million to support our impacted customers. In the mortgage market, we provided 4 out of 10 new mortgages into a recovering housing market last year, and we've continued to develop our product propositions to meet specific needs of customers, such as those who have negative equity but strong income and prospects. So, like I said earlier, our 5-year financial plan envisages us lending over 30 billion into this economy on a diversified basis through our diversified businesses. It's an ambitious target, so I obviously need to stop talking and get back to doing some doing. Also conscious, as Brian pointed out, that I'm the last speaker before lunch, so I definitely want to see a headline tomorrow: banker prevents people from eating. So, like, in summary, how do banks support any economic recovery? First and foremost, we must run our businesses properly, operating within acceptable risk parameters and robust balance sheets. We must ensure that our business models are sustainable, and if competitors start to behave irrationally, we must let them at it. The laws of gravity will eventually come home to roost. Never again must we become a risk to the solvency of the state. Taxpayer support, if received, must be rewarded and repaid. There are far better uses for tax euros than propping up banks. If a bank is in a country, it must be committed to that country. The worst thing is a bank which doesn't know whether it wants to be in or out, because that puts its customers in a limbo. The customers don't know where they stand, and they don't know whether their own ambitions are going to get supported by their bank. Commitment requires investment. Cost management is what everyone in this room must do. The management skill is in managing your costs while creating the capacity to invest in businesses you believe in. Whilst ensuring that risk parameters are sensible and suitable commercial terms apply, banks must ensure that we are adapting our products and offerings to the particular needs and demands of customers at this particular point in the economic cycle. Bank of Ireland believes in this country. We have been in Ireland for well over 200 years, and we will be here for many generations to come. Myself and my colleagues, we see ourselves as custodians of this heritage and catalysts for our future. The future requires us to deploy our capital, liquidity, and infrastructure to provide more products to more customers in our Irish businesses, professionally and efficiently, within acceptable risk parameters on a sustainable commercial basis. Meeting customer needs so that we'll have enduring relationships with those customers. Our customers must be with us, not because they have to be, but because they want to be. We firmly believe that the customer relationships we nurture and forge at this stage in Ireland's economic recovery will be the relationships which will be able to endure for generations to come. That's the real legacy for myself and my colleagues. That is why we must, are, and will support economic recovery. Thank you very much for your attention, and thank you for giving me the opportunity to talk about the ambition that we have for our bank.